Welcome to the Deep Dive. Here, we take your sources, the ones you send us, and we pull out the most important bits of knowledge, the key insights. Our mission, really, is to give you a shortcut to being well-informed. Maybe some surprising facts, and hopefully just enough humor to keep it interesting. Today, we're diving into a stack of global headlines from Thursday, July 31st, 2025. And you've given us a snapshot of, well, a remarkably busy 12 hours across the world. We've got natural disasters, major economic shifts, geopolitical developments, quite a mix. So the aim is to help you connect the dots, understand the real significance behind these events as they unfold.
Yeah, what's really striking looking at these sources is just the sheer range of things happening all at once. You've got an earthquake rattling one side of the Pacific, and at the same time, new trade tariffs are being announced affecting countries globally. It really brings up this big question, just how interconnected are all these global systems? We're talking finance, politics, even, well, nature itself. And what does that level of connection mean for how you understand the news each day?
All right, let's unpack that first big theme then.
Okay.
This major shakeup in global trade and the immediate economic fallout. So the headlines from July 31st, they point to a pretty sweeping executive order from President Trump, a real blockbuster, as you said. This order announced reciprocal tariffs. We're talking ranges from 10% up to 41%, targeting 92 countries. Some specific numbers jumped out: 35% on Canada, 25% on India, 20% Taiwan, 30% South Africa. And the immediate reaction, looking at your sources, a lot of investor unease right across the board.
Exactly. And if you zoom out a bit, you see that rapid market reaction. It just highlights how sensitive global markets are to this kind of broad trade disruption. We saw European and Asian stocks slide to multi-week lows, and specifically Asian tech markets think South Korea's KOSPI, their main stock index, that dropped nearly 4%. So this isn't just a minor dip. It really shows a fundamental rethink of risk. Investors are scrambling to figure out what this uncertainty means.
But here's where it gets really interesting, almost counterintuitive, amidst this tariff storm. The U.S. dollar actually surged. It strengthened roughly 5% in July. That's its first monthly rally of 2025. Now that seems odd. Why would the dollar strengthen when trade is being hit like this? Wouldn't that normally shake confidence?
That's a great question, and it is a bit counterintuitive, but it's actually a pretty classic flight to quality or flight to safety move. See, even with all these trade disruptions swirling around, the U.S. dollar is still seen, fundamentally, as the world's main reserve currency. It's a global safe haven. So when uncertainty spikes globally, like with these tariffs, investors tend to pull their money out of what they see as riskier assets around the world, and they park it in U.S. dollar assets, things like U.S. Treasury bonds especially. They're basically looking for stability. And paradoxically, that means capital flows into the dominant currency, even when the policies causing the upset originate from that same country.
Okay, so that makes sense. A flight to safety driving the dollar up. But while those sweeping tariffs send shockwaves, there's this other interesting thread, a counter-narrative maybe, specifically on the U.S.-China front. Your sources mentioned senior officials meeting in Stockholm actually postponed tariff escalation. The deadline was August 12th, and they've pushed past that. And this could potentially set up a high-level summit between Trump and Xi.
Yes, and that's what makes the picture so nuanced, so fascinating, really. On the one hand, you've got these broad new tariffs hitting nearly 100 countries, big disruption. But on the other hand, you see the significant truce, or at least an extension, between the world's two largest economies. It really encourages you to think critically about how complex international trade actually is. It's not just one simple story. It suggests that while trade policy can be wide-ranging, there are also these very specific, high-stakes bilateral talks happening at the same time. These can create exceptions, different paths forward. It's less a single trade war, more like a multi-front negotiation with lots of layers.
Okay, multi-layered indeed. Let's shift gears now to some critical geopolitical updates. Our sources take us to Eastern Europe. Russia is claiming to have seized Chasiv Yar in eastern Ukraine. This comes after nearly 16 months of really intense fighting for that location.
Right, and that claim, if it holds up, is significant, not just because the fight lasted so long, but because of Chasiv Yar's tactical importance. It sits on elevated ground, it's basically a gateway to several larger towns nearby, and it's been a key logistics hub for Ukrainian forces there in the Donbass. So its fall, after such a long and brutal siege, would really underscore Russia's sustained offensive pressure in that specific zone. It also raises, frankly, some hard questions about the long-term ability to hold defensive lines against that kind of continuous assault. halt. It tells you something about the sheer cost, strategically, of holding ground.
A grim reality there. Now, moving to another conflict zone, we're seeing pressure building in Europe regarding the Gaza war, specifically Slovenia imposing an arms embargo on Israel, banning exports, imports, and even the transit of arms.
And looking at the bigger picture, that decision by Slovenia, while maybe a smaller player, shows how individual nations are starting to turn that growing international sentiment into actual policy, concrete actions. An arms embargo isn't just symbolic, right? It directly impacts the flow of military gear. Now, the effect might be limited depending on the scale, but it can have real consequences on the ground for the parties involved. It really brings up this crucial point about the ripple effects, how diplomatic moves, even smaller ones, can influence the dynamics of conflicts already in progress.
Right, policy translating sentiment into action. Okay, so beyond these big shifts in trade and geopolitics, our sources also give us a more granular look. How are specific industries, specific national economies actually doing amidst all this change?
Right.
In Europe, for example, German manufacturing. It edged up slightly in July. That's the fifth straight month of growth, but the sources stress the pace is still modest.
Yeah, and what stands out there is that word modest. While, yes, it's positive movement, it signals growth for Germany's important manufacturing sector. That slow pace really indicates a cautious recovery, not a booming one. It's just maybe global demand isn't really roaring back yet. Perhaps that broader economic uncertainty we talked about from tariffs and such is still acting as a drag, even on an economic powerhouse like Germany.
Makes sense. And then looking at specific companies, we see industrial gas firm Linde beat their Q2 expectations. They cited price strength. Seems resilient. Meanwhile, Orano, the French nuclear fuels company, stated that these US-EU trade accords shouldn't really affect their operations.
And this really highlights how varied the impact of global trade shifts can be across different sectors. Linde finding strength in pricing suggests they either have significant market power or they're in a sector where demand is just holding up really well, letting them pass on costs. Orano's confidence, their feeling of being unfazed by these broader agreements, likely comes down to the nature of their business, nuclear fuel. That's often tied up in long-term government-backed contracts. It's strategic, so it's just less vulnerable to short-term tariff fights or general trade deal noise. Their business model is kind of insulated from these day-to-day trade wins, you could say.
Interesting distinction. Okay, and finally, looking ahead just briefly. Markets seem to be bracing for some key central bank decisions. UK, Canada, Japan, plus there's key U.S. economic data coming out soon. ISM services and durable goods orders are mentioned. For listeners maybe not tracking this daily, can you quickly explain what those indicators, ISM services and durable goods, actually tell us?
Absolutely. Happy to. So ISM services, that tracks the health of the non-manufacturing part of the economy. Think retail, finance, healthcare, the service sector, which is huge. It gives a pulse on that side. Durable goods orders, on the other hand, that's a key forward-looking indicator for manufacturing. It measures new orders placed for long-lasting items, appliances, machinery, that kind of thing, big-ticket items usually. So yeah, these upcoming central bank decisions and these data points, they'll be really critical in shaping the economic picture we've been discussing, especially given the context of the new tariffs, the trade truces. These are the kinds of indicators that often drive what markets do next and what central banks decide later.
Got it. Thanks for that. And then finally, almost like a punctuation mark on this theme of interconnectedness, a powerful reminder from nature. A magnitude 8.8 earthquake struck off Russia's Far East. That's huge. And it triggered tsunami warnings across the Pacific, leading to coastal evacuation orders even as far away as Hawaii.
It's a stark reminder, isn't it? The immediate, far-reaching impact of an event like that. It just demonstrates how connected our planet is, even beyond the economic and political systems we usually focus on. It underscores the kind of rapid, transoceanic response that's needed. From the science side, monitoring it, to emergency preparedness, public safety, you see a whole global system reacting, but this time to a non-human trigger.
Wow, what a day to dive into. We've covered sweeping new tariffs causing market jitters, that dollar surge, then the nuanced U.S.-China trade truce, which is a whole story in itself, a strategic claim in Ukraine, shedding light on the conflict's grim progress, and then this massive earthquake sparking alerts across an entire ocean. It really has been a day showing incredible, diverse shifts happening all at once across the globe.
Absolutely. And what really comes through, I think, is how all these different pieces, economic, political, natural, fit together. They create this incredibly complex, dynamic picture of our world. We hope, for you listening, you've gained not just a sense of what happened on this particular day, but maybe a deeper understanding of why it matters. How these seemingly separate events can send ripples through all sorts of systems, finance, alliances, even the planet itself.
So what does all this mean for you as you try to make sense of the news day to day? We really hope this deep dive has armed you with some useful context, maybe some surprising connections and key insights, helping you feel a bit more informed and better equipped to understand the forces shaping the world around you. Not just the headlines, but what's driving them.
And maybe this leaves you with a crucial question to think about going forward. As these global trade policies keep shifting, as geopolitical tensions ebb and flow, how might these events from just a single day, a trade truce over here, a new tariff there, a huge natural disaster somewhere else, how might they converge or maybe diverge in the coming weeks and months? How might they create unforeseen global consequences down the line? It's just a potent reminder, isn't it? The world is constantly in motion, and there's always, always more to learn from watching its intricate dance.